Welcome, Brent. Welcome, Jeff. Welcome, Gwen. Good morning. Ladies first, Gwen. Hi.
Hello.
We're going to talk about how you, as a geologist, an economist, an expert in the field, think about the resource space today. Let's start with the general themes, top down, before we get granular into your picks. So 2023, like I explained, not a great year for the mining sector in terms of shareholder value added. What are the major themes you're looking forward to for 2024?
This is, the talk that I gave yesterday is how to build a junior mining portfolio this year. And the way that I broke it down is to always remember that metals are not the same thing. And that seems like an obvious statement, but it is easy to get excited about the opportunity that's ahead in metals and to sort of lump them together. But actually they move in very different markets. And if you look at sort of a 5-year chart of uranium, copper, and gold, there's not a lot of correlation in their movements. They're actually quite independent. And I think that's an important thought to hold in 2024. Uranium is happening right now. And I think that there's a lot more opportunity in uranium right now. Gold, I think, is likely to move higher this year, and perhaps significantly. There's lots of factors that will determine the details of that. But I don't think it's going to happen tomorrow. I think we need that rate cut clarity before that happens. So that's mid-year. I mean, I'm arm waving here. My crystal ball is not super useful, but it's not tomorrow. It's maybe mid-year. Copper, silver, I lump them both as industrial metals. They have very strong supply-demand arguments, but I don't think they are going to play out in 2024 because I think we need investors as a whole to be positioning for economic growth, global economic growth. And I don't think we're going to get to that as the guiding principle for investors this year. Or we need those to actually run out of metal, which is what happened in uranium. And I don't think we're going to get to that in 2024 for copper or silver either. So those are longer term plays. And if you wrap your head around each metal, then the time frame for each, then that helps you determine whether it's time to enter them or maybe which kinds of stocks. Like uranium, you can enter any kind of stock right now because it is underway. Gold, it's happening, it's likely to happen this year, so does that guide you into moving into the companies that move sort of first and then having ready the ones that you might want to buy when it is underway? And then maybe copper and silver, maybe that's a longer term thing. And then the caveat on all of that structure and process is that discoveries can happen anytime. So if you're a discovery player, then you can go for that anytime, and then you just have to know how to make those picks.
Okay, thank you. Brent, which metals will do well this year?
Which metals?
Yeah.
This year, I'm focusing, and then Joe is in the Exploration Insights letter, mostly on copper, gold, maybe a bit of silver. I personally own a rare earth project down in Brazil. I think those are the places to be. Silver as well. Uranium, if you can find an undervalued advanced project, makes a lot of sense in a reasonable jurisdiction where the U.S. can, nuclear plants can buy the fuel from. That's a good place to be. But I do see this as, looking further back, the mining sector, commodities have always been cyclical. And we've been in a downturn for, seems like a long time. And there are values out there in companies with actual assets that are going to get picked up by somebody at some point in time. So I think right now is a good time just to carefully do your due diligence, look at the company, look at what they've got, look at the economics or potential economics. Do they have enough cash to get through this period? And just accumulate those. And looking out in the future, they're going to go up. That's how it works.
Jeff, how do you think a Fed pivot is going to affect commodities and metals in particular this year?
I was ready to answer your first question, but okay.
But let's do the first question first. Well,
so
together.
How I allocate capital in general, and includes this year, is maybe a little different and maybe not for everyone. Basically, I'm at both ends of the barbell. Extremely conservative, and then over here speculating in mostly miners. To me, there is no middle of the barbell. I don't consider Apple, the middle of the barbell. I consider almost every stock a speculation, even Apple. So on the conservative side, I'm in cash, I'm in CDs, I'm in treasury funds, things like that. And on the other end of the barbell, I speculate in junior miners. That's what I do, that's what I want to do, that's where I think I'm going to get the biggest bang for my buck. That's where all of us can still be a venture capitalist, if you will. So that's how I position my portfolio. Being on the far end where I'm speculating, I can do that. I'm allowed to do that because I have another part of my portfolio that is very conservative. So that's where I'm positioning is I'm actively speculating in junior miners. For 2024, I pretty much agree. Uranium is already running, so it's going to be a little hard to find an undervalued play right now. If you own them, I would definitely hold on to them. And gold. Gold would be the one that I would look at first in terms of gold junior miners to play. If gold makes a new all-time high this year and it sustains it, then I believe that'll drag silver, but probably not till later. Copper and lithium and things like that will be more dependent on the economy and things like that. But I don't invest in, a mining stock because of what the metal might do. I invest in a mining stock because of what the miner might do. And that seems like a simple statement, but you really have to focus on that. And I am focused almost entirely on discovery or a major expansion of a resource. That's where I'm investing. So that's my long answer.
Thank you. Before we get into your picks, I'd like to ask you all for your opinion on why it is that the junior sector, and actually the seniors as well, underperformed the bullion. I'm talking about specifically gold in 2023. I think that's something that a lot of people here may want to know. Gwen, I'll start with you.
Gold was really boring. It was really strong, and those of us who like gold and follow gold were happily impressed that gold held its ground over the last 3 years. And that's because, of course, gold is supposed to be inversely correlated to rates, and if rates are going up, gold was supposed to go down. The fact that it held its ground was very impressive to those of us who know and care, but a sideways chart is not interesting. And what we need for gold stocks to rise is excitement. And there wasn't any excitement in gold. There wasn't.
But the stock markets outperformed gold. The S&P, NASDAQ, yeah.
And that's the thing, right? You see this sideways gold chart, and then you see all kinds of other opportunities that are doing more interesting things. So there was no impetus for the generalist investor to turn their eyes towards gold. And if we don't have that, there aren't enough just gold investors to keep the sector rising. We need those who aren't always playing gold, those who like to play gold when it demonstrates, when it puts its hand up and says, hey, I'm happening. There's a bunch of investors who will do that, but gold has not put its hand up and said, pay attention to me over the last few years, while relative to, just buying the Magnificent Seven and playing that opportunity, or buying treasuries and the various opportunities that were much more apparent in the market. So that's what I think. I think there just wasn't enough reason for generalist investors to turn their attention here. Is that opportunity today? I think so.
So with interest rates falling down this year perhaps, and the Magnificent Seven stocks already very richly valued according to many, do you think the tides will change in the favor of the resource sector as a speculative play?
I feel like I'm taking up too much time here, but I think that a big factor in the junior space is that go back 15 years, and especially in the Canadian investing sphere, if you wanted to speculate, if you wanted to put high-risk capital into the market with the hopes that you're going to get high return, when metals started to get interesting, that was the place people played. Like, it almost had a stranglehold on speculative. It didn't, but it was like a major, major player in the speculative world. In the last 10, 15 years, speculative options have abounded, and they've become really foremost in the investing world. AI, crypto, NFTs, monkey memes, whatever it was. There's been all kinds, right? And they've all attracted a lot of the attention that might have otherwise gone to junior mining stocks. At the same time, metals haven't been particularly interesting. So it's compounded, and it's meant that speculative investors aren't particularly focused on our sector the way that perhaps they used to be.
Brent, let me get your take on the same thing, and we'll move on.
Yeah, it hasn't been great. Stating the obvious. Since the last 20, 22 years, the XAU is down about 60-something%.
Yeah.
While the S&P is up from that period about 450%. So there's not a lot of incentive to put money into this sector. That said, nobody here, I think, invests in the XAU. We all buy individual stocks, which is where we can all make some really good money. But the problem with this sector, the junior sector, is liquidity. I mean, I've been the last couple of big conferences I've been to with fund managers and such. I asked the audience, how many of you are here for the first time? And it's surprising how many big investors are starting to come into the sector, just trying to figure it out, because they see value here. But it's like, how do you realize that value in such an illiquid sector? And in terms of the real small ones, there's not a lot of real money coming into it. I mean, you look at the other crypto. Like I was going to ask you, David, what are the crypto players going to come into the sector, or are they just not even interested? You know a lot about that.
You know what? Let me address that at the end, because I want to give Jeff a chance to answer the question, and then do your picks. So let me address that. But I will come back to that.
There is an empirical reason why gold is going to do well this year. I looked at the last 11 easing cycles from the Fed, going all the way back to the 1970s, when they lower rates, or at least are not raising rates, when they're dovish. Of those 11 times, the gold price has risen in 9 of them. So we're going into a period where the gold price itself is likely to do well. I think it'll make new all-time highs this year and sustain that. So 21, 22, 23, whatever the case is. Once it breaks decisively through there, I think that could potentially lead to a change in sentiment. Gold will have raised its hand, and we'll see some more mainstream investors come into the sector. If that shifts sentiment, we're going to see a lot more excitement in the junior miners. Doubles are going to become triples and things like that. They're so beaten up, they're so undervalued at this point that there's going to be some easy money made. And I hesitate saying that because I don't want someone to recklessly invest, but there will be some easy money made once that shift occurs, simply because of how beat up we are right now.
Let's talk about how you pick junior mining stocks. Your process, red flags you look for that will eliminate picks immediately, and a few green flags you look for. Gwen, start with you.
Yeah, so I'm sure each of us could spend an entire half hour answering that question on its own. The way I distill it, if I'm trying to give it in a short answer, is can management in a few minutes tell me a clear plan for how they are attempting to add value in the near term? And I know that sounds basic, that's what every stock is supposed to be trying to do, but that requires a lot of layers of backup when you're talking about an exploration company. So not only do they have a project that has, where there's some geophysical maps that have pretty looking bullseyes on them, but what is are there multiple layers of evidence for the target? What is the plan for how you're logistically, physically, permitting-wise going to attack that target? Do you have the money to attack that target? What are you going to do if you hit on that target, and what are you going to do if you miss on that target in terms of capital and in terms of focus? Management that is management's job, to have those questions answered. And you'd be surprised at how unfortunately infrequent it is that they don't have all of those answers available. And so it's just a clarity of plan that covers all the bases. I'm happy to talk to anybody about that more, but that's what it comes down to for me.
Yeah, I mean, you hit the nail on the head, really. There's not a lot to add to that. I think, from my perspective, I look first at the geology. That's what I am. The geology, the target, is a target realistic? Does it make a difference? Too many companies, in my view, are out there looking for something that, even if they're successful, nobody's going to care. In terms of nobody, I mean none of the major companies are going to care. So what you're going to have is a company with a, developing some sort of resource that's, it's okay, it's mediocre really, and they're going to continue raising money at the same or lower share prices, diluting out whatever you might have made in that to come up with a deposit that no one really wants. That to me is the biggest issue here. And so when I talk to a company, it's like, okay, what are you looking for? What does it look like? What do you have to achieve in order to advance this project at higher share prices? What's your CapEx going to be if you find something? I mean, you need to know that sort of thing before you can go into a target. So those are the sort of things that I look for. And if they don't know that, that's the biggest red flag. Likewise, the presentations in their newsletter, in their news releases, or on the website, I want to see, paragraph or two, very simply, what's going on, anyone can understand. Then I want to see details. I want to see cross-sections, maps, what they run. Another red flag, if they do not include historic drill holes, historic data, big red flag. Most of these projects have been drilled and tested a few times in the past. They bring them up, rename them, drill the same hole. So be careful of that. What's been done there before, and what are they doing different that's going to make a difference? I'll quit there.
So when I hear about a stock that is jumping or a great drill result and I'm not familiar with the company, first thing I ask is, okay, where is it and who's behind it? I want to know that it's in a pro-mining jurisdiction, not a risky jurisdiction, and I want to know who's behind it. And the people behind it need to have demonstrated success in their past in order for me to really want to get behind them. Now, I will miss some because of that. There are some questionable jurisdictions where there's going to be some, good drill hits, or someone with no experience can have success. I understand that. But we're already in the riskiest sector in the world, so I want to reduce that risk. So that's why I do that. And it's very easy to look at if you have strong people behind a project. Just go look at what companies they were affiliated with before, that they were running before, and ask a very simple question. What did the stock price do under their tenure? Did they create shareholder value? That's success right there for us as investors. That's what I'm looking for. And in terms of the projects, Brent, like Brent's saying, it's got to be like my grandma's chocolate chip cookies, big and rich, okay? That's what you're looking for, something that either is or can be big and rich.
Right. So let's do a 3-minute stock pitch each. One pick and why.
One pick. Oh, put me on the spot. I'm going to talk about uranium. I'm going to say yes. The big uranium, the flagship uranium companies have obviously moved significantly in the last 8 months. I get that. I think there's more room to go in those stocks. I think there's quite a high likelihood that this Russian ban happens, either from the American side and or from Putin saying, screw you guys, I'm going to cut you off before you cut me off. And I think that can have a really strong impact on the uranium price. So I think there's a lot of opportunity in uranium across the board. What I want to say right now is that because of sentiment hesitation in uranium, which is a long-standing thing, that has shifted a lot in the last few years, but it's sort of like a hangover, right? The hesitation is still present. The rising tide has not actually lifted the pre-discovery explorers. And I get that the pre-discovery explorers are the riskiest, but when you have a very buoyant sector, at some point, the tide does lift all the boats. And so you can actually look at the sub $30 million market cap uranium explorers, and most of them haven't moved anywhere near as much as the major companies. Now, when you're going to do that, then go in and make sure that there's actually uranium expertise on management. We're not really at the stage yet where there's all kinds of fly-by-night junior uranium explorers. We're not there yet, so it's not as risky as it has been in other uranium cycles, but make sure that management is legit. They have uranium expertise and success in the past. And if you can find a pre-discovery explorer, the one that I'll name is COSA, C-O-S-A, COSA Resources. This is the team that was behind ISO, the discovery at Hurricane. The members of the team have multiple discoveries in the Athabasca. They're experts. And they've spent the last year and a half building a really interesting portfolio of projects. They're a pre-discovery explorer. They don't have an asset that I can tell you pounds or grade or anything. But I think there's the potential of a twofold opportunity, which is a rising tide reaching down to the explorers and giving them some of the leverage that they haven't enjoyed yet. And then, of course, if there's a discovery, then, who knows what might happen.
Would you like to give a name?
That's COSA, C-O-S-A, COSA Resources.
Brent,
I'll give you 2 in 2 minutes.
go ahead. You're a good
The first-
negotiator.
And this first one, just for the benefit of Jay here, is Vizsla Silver. They've got a big district of high-grade silver gold veins in Mexico. They're generally wide veins. The grade is good. Location's good. I think that is probably the best undeveloped silver project that I'm aware of. And sorry? Vizsla, V-I-S-Z-A.
V-I-Z-S-L-A.
There you go.
V-Z-L-A.
Got it. Thank you. Second one I'm going to give you is not here. Arizona's Sonora Copper. I've been there a few times. Joe Mazumder's been there a few times. It's down in Arizona. Here's the key to any deposit in Arizona. It's got water. It owns the water. It owns the land. It's high grade. It's permittable. It's on private land. And the copper oxide they're going to produce, they can produce it right there on site and sell it right there in the States. So the concentrate doesn't have to go to China or somewhere, which is an issue these days. So that is a very nice project as well. It's Arizona's Sonora Copper, ASCU, and that gives me 4 more seconds. I'll grant that to you.
Okay, I'm going to give 2 in 2 minutes also.
Thank you.
With the caveat that you must own a basket if you're going to be investing in junior miners. But these 2 companies most people have not heard of, which I love. One is Emperor Metals. They're here. You can talk to them. I stumbled across them, and this might be one of the best kept secrets in Quebec. They already have a small resource, but what CEO John Florek did was he brought his AI success over to this company and did some modeling with that and realized there's a lot more ounces here than they previously realized. Also, there's probably 70,000 meters of unsampled drill core. It was never sampled. They've hit high grade. They have a high grade core basically with probably a bulk tonnage asset underneath it. Long story short, it appears that they're going to have not 1 or 2 million ounces of gold here, but 3, 4, 5 million ounces of gold, potentially even more. They're not going to have to build a mill because all the mills in the area, they're surrounded by projects and mines and mills. All the mills in the area are underfed, so they're going to need ore. So Emperor's not going to have to build a mill. The CEO was buying shares in this stock before he joined the company because he liked it as an investment. That really made me perk up. It's Emperor Metals, they're here. The other one you probably have not heard of, which I love, again, Argentina Lithium and Energy. Have you heard of the company called Stellantis? Most people have not heard of this. Well, they're a major auto manufacturer, huge company, and they invested 90 million Argentine pesos in this company. And it's a tiny lithium explorer in Argentina. They have no production. Why would a major auto manufacturer invest in this company? There's a lot I could say about that, but they're in the lithium triangle. They're backed by the Grosso Group. The projects are highly prospective. So I'm going to join Stellantis and invest in this tiny lithium explorer. Both those stocks are very undervalued. Nobody's heard of them. I think they're going to run at some point.
Okay, I'm going to answer Brent's question in 30 seconds or less, and then I'll open the floor up to any questions for our panelists. I think we have a few minutes for that, 5 minutes for that. So Brent's question was, is Bitcoin going to take away capital from gold? Other way around.
Actually, are those Bitcoin investors going to move into this sector? Will they or won't they?
Okay. My take is no, because they're not substitute assets. I think altcoins might. So gold, the gold versus Bitcoin debate, I think Gold's value proposition is that it's a safety play, inflation hedge. Its value is derived from thousands of years as a monetary metal. Bitcoin is none of those things. It has no correlation to interest rates. It has no correlation to the inflation rate. It has a perfect correlation to the NASDAQ, so it's being treated by institutional investors as a leverage play on tech stocks. So the people that invest in these assets are doing these for different reasons. So no, they're not substitute assets. However, based on my conversations with people on my show and from the people at the conference and just regular retail investors that I've talked to, what would compete with junior miners, for example, would be altcoins, things like Ripple, things like, you go through the list of altcoins, Ethereum. Those more speculative cryptos would pull capital directly from junior miners and vice versa. And I think this year, if you believe that risk assets will have a good year, then perhaps there's going to be competition from either sector. It really depends on your personal preference. But Bitcoin and gold, no, is my take. Okay, 3 minutes. Do we have any questions for our panelists?
Hey guys, thanks for your insights today. How do you feel the war that we're facing around the world is affecting what you're investing in and the industry as a whole? Thanks.
Wars? I haven't noticed any. I don't know. I think that has a short-term effect on the gold price. I don't know how it's going to work out long range. Again, it'll have an effect on the oil price, which goes down to cost, so cost will increase in the sector. But I don't have a big opinion on that.
My take is that it's a fundamental force. I think the reason that gold did so well in the last 3 years, holding its ground despite the rate environment, is because of de-dollarization and deglobalization. Those are words that we've thrown around for decades. I think they're becoming realities. It's not a tomorrow thing, but they are becoming realities. And the wars unfolding are underlining that for sure. And so if you look at the bank of central bank gold buying, it's up significantly, 2022, 2023. The chart that I really love to look at when I'm looking at those numbers is the one that divides it between disclosed, so the central banks that are like, sure, tell anyone I'm buying gold, it's fine, and undisclosed. And the undisclosed portion of the bar is now 2/3 of the bar. So it's a whole bunch of central banks out there quietly buying gold and not wanting to be loud about it because of these risks, because of de-dollarization, deglobalization. Who knows where that's going to lead and there's going to be lots of specific and general fallout from those unfolding processes. But I think that's a really fundamental support for gold. So that's not a momentary thing with these wars. Of course, the wars have also clearly accelerated the uranium argument, and that's a quite a detailed and specific answer. But that's where I see it coming into play.
Okay, I think that's all the time we have. Thank you very much for attending. Thank you to Gwen, Brent, and Jeff.
Thanks.
Thank you.